Hello, guys, and we have some crypto news for you tonight. And of course, big news is that the ETF might actually pave the way for Bitcoin pension funds. Now, pension funds are a big deal. Why? Is because as of third quarter 2023, aggregate public pension assets were at $5.5 trillion dollars. So that was a decrease of 3.0% from 5.67 trillion reported for the prior quarter, but that's just the up and down of the market. The value is higher than the same quarter 1 year ago by some 293 million. So about $5.5 trillion of pension funds. Even if 1% of those pension funds comes into crypto, that's going to be like $50 billion. And obviously, that's still a lot of money to actually come into crypto. So there are people that believe that the spot Bitcoin ETF will pave the way for pension fund retirement, and that is not just by anyone, that's by the CBOE digital president, John Palmer. And he is confident that the new wave of institutional investment will follow spot ETF approvals. That's one of those things like pension funds may not be able to directly buy Bitcoin, but they will be able to buy more regulated assets like these ETFs. And of course, every one of those like every share of ETF has to correspond with a buy of Bitcoin in the market. So that could definitely squeeze the supply of Bitcoin a bit and make the price go up. So basically, this was on a January 2nd interview with the CBOE digital president, and he says approval is going to pave the way for pension funds and RIA based funds to be able to invest in assets in a spot Bitcoin ETF. I also think there was a bill that basically was going around that said like starting in January of 2025, not 2024, that like pension and retirement funds may be able to start looking at Bitcoin investments. So that will also be good as well. That might be another boost for 2025. I think like it said like also banks were able to hold like 1 to 3% of their like their total reserve in Bitcoin. That could be another big boost. So, a year from now we're going to be talking a lot about that. So an RIA is a company registered with a federal or state regulatory agency to provide investment advice. So this is what he's actually doing. And of course, this comes a week before the January 10th deadline. So a lot of people are looking at like these high-powered funds and high-valued funds getting into Bitcoin, and he expects derivative products to expand significantly following the ETF. Now, the problem with the derivative products is they can actually short the ETF, which I'm sure some people will, but I don't think it would be smart to short it as it actually comes out, because if you short it as it actually comes out, then, like if it pumps up, you're going to be hurting a lot. And he says it's going to be hard to judge what the investor breakdown is going to be yet. He said, noting that institutions lead the way in gaining access to hedging tools, but retail will also look for that as well. So there's going to be all kinds of things there. So yeah, basically like breaking a pattern is emerging. Other funds registered as securities also already trading on NASDAQ are amending their prospectuses so they can now expose 15 to 50% of their AUM to Bitcoin through the spot ETF. So you can see like not only individual buyers are licking their chops and wanting to buy, institutions are wanting to buy as well. Saylor was kind of right on this one. So it's institutions and individual investors that want in on the action. And the ETF might be the only way they want to buy it because once again, an ETF is a regulated product, whereas Bitcoin may not count as a fully regulated product. So there might be some rules against buying the actual Bitcoin, but nothing against buying the Bitcoin ETF. And it is very, very clear that some of these institutions want in on this ETF. So that's very good news. If pension funds come in, that's, tens of billions of dollars. And even if that's over a set period of time, that's going to pump Bitcoin, hopefully starting next year and into the years afterwards. So we have a new tool for finding these meme coin gems, hopefully like soon after they come out. If you want pre-sales, you're going to have to check Discord and Telegram, like I've said before. But this new tool is called birdseye.so. As you can see, it gives you a look on all the chains, what's hot, what's trending, what's profitable, and highest trade in 24-hour volume. They also tell you what chain it's actually on. So you can also just switch to looking at only Solana. You can see like what's the highest 24-hour volume, 24-hour traders. And there's also like this Find Gems tab that you can actually find over here. You might actually have to refresh it after you click on it because sometimes like this doesn't work as well. But if you click on Solana first and then you click on Find Gems, this is blocked by Cloudflare, I guess, to avoid spamming, because it does draw a ton of data on the API. If you click Solana first and you find gems, you can see like they'll tell you which one is moving up the fastest in the last 24 hours, which one's moving up the fastest in the 30 minutes, hour, and 2 hours. And this is like the graph. Now, like I said, you're going to have to be very vigilant, maybe set up some kind of API on your device for new stuff that actually comes out. You can see that like Spiro, and I have no idea what Spiro is. This is not like an endorsement of Spiro by any means, because I have no idea what it is. It's gone up 14,000% in the last 24 hours. The TVL is only 153.5K. And the 24-hour trades, basically 24-hour volume is $6.8 million. So you can see right there that, you know, someone was massively pumping it up. And the price is basically 0.0 with 6 zeros, 1297. A very, very small swap on Solana. But these are going to be the kinds of coins where you can actually gain, you know, like 100x overnight, because this is literally 149x overnight. Same thing with same thing with some of these things. Like you can see like the TVL, you know, these small TVL coins, they're going to be the ones that move up a lot. Like, you know, this fat party hat thing, I don't know what the hell that is up 1,263%. So be very, very careful with this. You can track like what's trending right now. What I would suggest if you're really into this is that like you corroborate these results with what's going on in Twitter, and see if there's like a lot of hype in the social media networks about any of these coins that are moving really, really fast. Obviously, you can just can look at any of these columns. I would look at like the 1 or 2 hour column to see if anything's pumping really fast. Like if something's massively in the green on 30 minutes, 1 hour, and 2 hours, it still might be continuing on a pump if it hasn't pumped that much more on the 24. Like something like this where it's like massively positive on 24 hours, but overall negative on 22 hours, you might want to pass out on. Also, you need to check the volume. Like, you know, if it's less than $1 million in volume, like you might not want to put too much in there, even if there is a lot of money to be made, because you won't be really able to pull it out if there's just like not enough liquidity, and you can easily run into that on some of these coins. Those of you that were in those Masternode coins on random exchanges years ago will know what I'm talking about. Like some of those Masternode coins had huge gains over 24 hours, but you could not actually cash out. So essentially, you know, this is that new tool, birdseye.so. You can click on your chain that you're interested in, click on find gems, refresh, and you will actually get, you know, information like this. Now, this is just data that you have to parse. You know, you have to like collaborate it with other data sources, whether it's Live Coin Watch, whether it's like just your own research on Twitter, Discord, Telegram, other things like that. It is very, very dangerous. I wouldn't play with more than a couple $100 on this, but it's really like, you know, your money, you do what you want with it. This is not financial advice, but many of people have asked me like, hey, where are some tools to help me find those meme coins as they actually come out? Now, you're not going to be the first ones in, because the first ones in are always the creators of the meme coin, and they're the ones that are going to benefit the most, but you can get in soon afterwards if you actually check these charts. It's a lot of vigilance and a lot of work, but it could actually be worth it if you can make like, you know, 10, 15, 20x overnight, or even 100x overnight, like so on this coin. And every once in a while, there'll be something like Spiro. I don't know what Spiro is. Once again, I don't have any myself, so yeah. And the other thing is, Radiant had an Arbitrum exploit worth $4 million, and they had to halt Arbitrum markets. Now, this is not Arbitrum's fault. The blockchain security firm said the issue was caused by a known rounding issue in the codebase. I don't understand. If you have a known rounding issue in the codebase, why don't you just fix it? You know, like you should just lock it and then fix it, because, you know, costing people millions of dollars because of a known rounding issue, that just sounds like really stupid on your part. So cross-chain lending protocol Radiant, so this is another lending protocol hack, which is why I don't want to get into lending at all. Cross-chain lending protocol Radiant Capital has paused its lending and borrowing markets on Arbitrum after receiving reports of a $4.5 million exploit affecting one of its newly created USDC markets. So basically, like, it's a USDC market on Arbitrum, and it was a known rounding error attack. So they kind of like closed it. Hopefully they're going to fix it. And because it is their issue, they should actually reimburse the people as well if they can't get the money back. But they're probably going to offer some kind of bounty for exploiting this bug. Although it's dumb, because once again, they knew there was a bug there and they didn't actually pause it. So blockchain Like Peck Shield and Boson both identified the error, with the attacker exploiting a rounding issue in the code base, which led to a cumulative precision error. This ultimately allowed the attacker to profit through repeated deposit and withdrawal operations. So basically, like getting on the mistaken arbitrage. So the root cause is not new. It basically exploits a time window when new markets activated in a lending market. So that's why forked from the popular compound AAVE. So essentially, the attacker manipulated the index parameter, which later served as a denominator to become extremely large. The contract is a rounding issue, blah, blah, blah. So hopefully they actually fix this and they can actually, hopefully they can fix this and they can actually get this market back on. Due to the recent exploit, Radiant urges all users to revoke approvals to prevent further loss of funds. So, yeah, hopefully they pay the users. This is a known rounding error and they shouldn't have actually let this happen. So that's the news for today. Like and subscribe, hit that bell notifications button. I will see you guys later.